The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Masters Show. I'm your host, Steve Rhodes. Thanks for joining me, folks. We got the Dow up 25 points right now. S&P's up 2. Composite just turned slightly negative, down 26 ticks right now. The Russell 2000 up 7 pennies right now. Our call number is 877-927-6648. Now, this morning's newsletter, folks, I gave my clients a list of 19 reasons, 19 patterns that were completed out there. I was looking just simply 19 patterns that were completing, about to complete, had completed in the marketplace out there that were reversal patterns. Now, let's say it goes short here today or right at this moment. I'll give you something to look at, though, that nobody else will, I'm sure. I'm not going to tell you how I came up with it, but I will give it to you here. That's assuming that you stay and you pay attention to us here for the next hour at TFNN.com. Thanks so much for joining us, folks. So I gave 19 reasons. Now, I could have come up with more. I just simply ran out of time because there were more patterns that were out there. And so we're really at an important crossroads here. If the market blows through these areas, that says a really strong bullish move is underway. But you do have all kinds of patterns. There may be even some patterns here that I overlooked, because I didn't include any patterns that Basil Chapman might have, and he follows here today next, the 11 to 12 show. Larry Pesavento is pulling himself out of sick bay. I guess he's gotten the release out of sick bay. He'll be with you from 12 to 1 today. Daryl Martin, 1 to 2. David White, 2 to 3. Ken Shreve, 3 to 4. And Tom will be with you from 4 to 6. He's out buying real estate this morning. He's Gold Long America. And if you haven't had a chance to check out Tom's special report, certainly you want to do that. That's on the homepage of TFNN.com. Also over on the right-hand side, you will see everything you need for the Tiger Real Estate Investment Opportunity Fund. Go check that out, folks. So as we come into the markets here, as I do during the second hour, instead of looking at the futures contracts, we take a look at the cash index. So we're going to start off with the S&P cash here. Yesterday, getting up to a price point of 1434.27. What was it doing? It was getting up against a little bit of a horizontal resistance area. The swing point of November 6th, it got up over it, rejected that area. Tried to get up there this morning, has not been able to do it thus far. It is up against an area of horizontal resistance. If it can close up above that, the 0.786 level, 1448, is just over its horizon. It's trading right now in between floors. The 1424 level is the 0.618 level. Yesterday closed at 1427, so close enough. We'll see where it closes today. Closes back below 1424. That really does set up a good possibility of a reversal out here. Also, you can look at the 1417.26. That would be the low of November 6th out there. If it closes at that level, what we will also see is we will see the S&P get back underneath that longer-term trend line going back to the October 4th lows out there. So that is the number that you want to be those numbers that you want to be paying attention to on the S&P cash out there. Let's go take a look at, let's see what pops up on the screen next. The NDX 100. The NDX 100 yesterday coming into a area of resistance. That resistance being what started the downdraft on November the 6th out there. That high, 2696. The level was attacked on December 3rd. And again, yesterday got up to 2696.90. Rejected that area today. Gapped up. That when I say gapped up, it gapped up above yesterday's close, got up to a high so far, opened at 2694.40, the high 2694.43, and so far has just simply continued to sell off. No great volume or anything here just yet, but again, up against a resistance area. If that can be taken out, what are the sights set for the NDX 100? Well, clearly, it would like to go test that trend line out there. That certainly is a game. If we take a look at just retracements from high to low, the high out there that we're going to be using is the September 21st high. We know the low is going to be that November 16th level. 0.618 is 27.31. It's at 26. 82 right now, so it's got quite a ways to go in order to get up to that level. Don't think that it's going to do that. It's not going to do it without Apple moving along. Apple down $1.26 right now. Let's go take a look at the next index that we have out here. That pops up on our screen. Oh, this is the beauty. So I'll go ahead and give you the number here. New York Stock Exchange. So the New York Stock Exchange, this has been the strength inside the marketplace. I mean, absolute strength out here. You've only seen a couple of days where the bulls tried to, or the bears tried to show up, but they just simply got scared away. The first day was on November 27th. The second session where they really showed up was on December 3rd. They kind of lagged behind a little bit when we had that doji candle on December 4th out there, but not a whole lot of bears in sight here. The New York Stock Exchange, as I mentioned yesterday, may be setting up an A to B equals CD. It's got quite a ways to go before it finishes that. That would be 84.57 out there. It is trading above that 0.786 level. So here is where you want to be watching for a reversal signal. Should have put this in the newsletter this morning. Don't know why I didn't. So here is where you want to be paying attention to a reversal signal. If you get a close today or tomorrow, and I suspect that if we're going to see a reversal, it'll happen between today, tomorrow. Okay, I'll extend it all the way out to Friday. However, today you get a close with 1,783. Write that number down. 1,783 issues on the advanced decline line on the New York Stock Exchange in the decline mode out there. That, folks, will be a reversal. I say that'll be a reversal both short-term, intermediate term, and long term out there. Write down that number, 1783 out there. And it's got to be that number exact or more. That's on the New York Stock Exchange. Let's go take a look at the next index that we have out here that pops up on the screen. That would be the SOX. That would be the Philadelphia Semiconductor Index. What we can see here, also making a 100% move of a move, coming back and testing the swing point from October 5th yesterday. That high, 389.39. Yesterday's close, 389 even Steven. Get it up a little bit above that here this morning. Trading back inside that range, very close to it. It's trading out at 309.40. The number there, 389.39. Something else that you want to be paying attention to would be the SOX out there. That's also in that 0.618 retracement level. That is on the SOX. Let's go take a look at the next index that pops out here. Oh, the transports. Let's go take a look at the transports. Let's go see what the trannies are doing out here. Trading out yesterday, making a 100% move of a move. That means it was coming back against a most recent swing point high. In this case here, that was a swing point from November 6th. 521349. That's the number. It's trading right now at 51.96. Yesterday, got up over it. This actually was probably one of the most bearish signs out here, at least with regard to bears showing up. So it does 100% move of move. You can see here you've got this long upper shadow. It's an indication there that the bears are trying to exert their forces here in the transports. Now, if you take a look at the transports, we could draw a line across here. We can see this is really a significant resistance zone out here. You can move this line up and down. You know, you got to give it a little bit of freedom to roam. I'll just leave it right there. We can see that this has been an area of resistance, certainly going back to July of 2012 out there. You could go back even a little bit further. You could go back into the time frame of June. So for about a half a year, an important resistance area. That's on your transports out there. Let's go see if we got any other indexes that happen to show up here. What have we not done? How about the small caps, the Russell 2000? Russell 2000 right now up 13 pennies, so a flat trading session here. The Russell 2000, what has it done? Oh, how about that? That's interesting. Very interesting, Schultze. So when we take a look at that, we're taking a look at the Russell 2000 this morning here, getting up into that open window. We're talking about the window from October 18th. The low out there is 837.12. The high so far today on the Russell 2000 is 837.29. Gets up there, closes the gap. However, it still is a resistance area. That's an important, difference between closing the gap. It's just you want to understand your areas of support and resistance. It's like on Dave Letterman. You want to know your cuts of beef, right? I haven't watched the show for a while. Don't know if he still does that segment or not. Anyway, you want to be paying attention to the Russell 2000. This might be giving you a little bit of a reversal signal here as it gets up into the area of October 18, closes that gap, still is a resistance point. That's the low, 837.12. It's traded at 835.05. Probably the most bearish outlook for the Russell 2000 today would be if it closes back below the trend line. Yesterday, the trend line we're talking about is the October 4th trend line that you can use as the next tag point as June 4th out there. Yesterday, the Russell 2000 did get up above it. Stays up above it, it could certainly continue to rise, but the bearish case would be look for the Russell 2000 to get back and close below that area. Today, tomorrow, Friday, let's say out there. Let's go see if there's any indexes here that I have overlooked. There's probably one or two. There is one. Well, there's two, really. Two left that we could take a look at. We could take a look at the Dow. So let's go take a look at the Dow Jones. Dow Jones busting through that ascending wedge pattern that's out there, ascending triangle, and which normally has a bearish outlook. I'm going to get rid of the tops on that. And what the Dow did here yesterday, close enough, got back and tested the trend line. Now, that is a normal occurrence out here. That's, again, the trend line coming off of the lows from October the 4th out here. So if you take a look at the Dow yesterday, the Dow got up, pretty much tried to tag it, got stopped by horizontal resistance. That line here is the black horizontal line that we're looking at. That line can certainly be moved up here right into this area. We're looking at the highs of November 6th. That would also be the highs of November 5th, and you could say November 1st as well. So if you get a close back below, let's use the high one, 13,290, 13,290.75. It's traded at 13,270 right now. You would be rejecting a resistance area. Now, what would you be looking for here on the Dow to give you some kind of reversal signal? Well, I would say, how about just simply using this really inclined trend line out here, just simply using the low of the November 16th session. And probably you just use the low of either December 5th, or you could certainly use the low of November 28th out there. That could be an area of resistance, an area of support out here. So look for a close. So I'm giving you what would be like nice colossal failures out there in a couple of the indexes. Let's go take a look at the last one. Let's look at the composite before we go into the break here. So as we take a look at the NASDAQ composite out here, we can see also trading into resistance being set up by the downdraft date of November 2nd out there. Let's draw the line on my screen. Let's get rid of this line here. You can see that the this line here is acted as a resistance area. Let's draw this across. There we go in black. I can move it down just a bit here. So that area is the current resistance level for the composite. It's trading out right now at 3,023. So long as this stays underneath the high of November 2nd out there, which is 3,033.85, you've got another rejection of a swing point and a horizontal resistance area. 877-927-6648. Priceline popping this morning up $4 and change. Coinstar up 2. Netflix up 2. Berkshire Hathaway, I believe the stock was halted. The B shares up $2.02. Geospace Technology off 7%, down $5. CF Holdings off 2%. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. The Dow is up 24 points right now. S&P's up 3. Composite up 2. Small caps up 86 cents. So let's take a look at the ETF structures out here. Let's go through those. We got the IWM. The IWM right now is trading into the October 18th gap. That is the 31 million shares up there on October 18th. Yesterday, as it tagged that area, tagged it with 40 million shares. So said it had volume, wanted to go back up there and test that swing point again. That is what it is doing here this morning. Volume-wise, 10 million shares in about an hour's worth of trading. So it's got some volume in it again today. The high of that swing point is 84.15. The low is 83.45. That is on the Russell 2000, the IWM. Let's go take a look at the diamonds. Let's look at Lucy in the sky here with diamonds. The diamonds taking on the swing point downdraft day of November 2nd. Yesterday, 5 million shares was at that level. Yesterday, taken on with 4 million shares, giving you a little reversal candle out there. We'll see if that holds today. You would want to see a lower close today on the diamonds to confirm that. That would be, it's like a shooting star candle out there. I don't know if it completely qualifies. Very close to a shooting star. On the Dow diamonds out there, you'd like to see a close below 132.18 today. Let's go take a look at the SPYs out here. See what the SPYs are doing. The SPYs trading out right now at 143.80. So the SPYs are up and over the swing point, just slightly up and over that same swing point from November 2nd yesterday, as well as taking on the swing point from November the 6th out there. November 6th has 106 million shares. November 2nd, 137 million shares. Yesterday gets up and over that on 152 million shares, says what? And even though it rejected that, with the volume coming in there, says it wants to at least test it again. That's what it is doing this morning. It will be another rejection if you get it closed below 143.72, trading at 143.80. Let's go take a look at the Qs just to round out the index ETFs out here. The Qs here, testing the swing point from November 6th. That swing point has 29 million shares. Of course, the real benchmark is really 70 million shares, which is the downdraft from November 7th. But let's just look at the swing point on its own merits. 29 million shares. Got up there with 28 million shares and rejected it on December 3rd. Yesterday was coming in with 13 million shares. So 13 going against 29. I don't think so. This morning here, got up over the level, is back inside there. This morning, though, it's got 8 million shares, so more volume that we're seeing here this morning than likely the run rate that we, on a run rate basis, compared to what we saw yesterday out there. That is on those 4 ETFs. If we take a look at what's going on inside the markets, let's look at the Dow here. The Dow leading to the downside. You've got Walmart back $1.57. We'll take a look at Walmart. Coca-Cola is off 24 ticks. IBM down 16. 3M off 21 cents. Leading things to the upside, DuPont. DD is the ticker symbol. Maybe we'll look at DuPont, DD, and we'll look at 3D Systems, DDD. How about that? Maybe we can do that. Chevron up 59 cents right now. Travelers up 47 cents. JP Morgan up 55. We take a look inside the IBD 50 out here. Leading things to the downside, CF Holdings off about $4. Stratasys, the other 3D company out there, off $1.15. Alta Salon down to $1.05. Sherwin-Williams off 73 cents. To the upside, leading to the upside, you got Priceline, then followed by MasterCard. Priceline's up $4. MasterCard up 2. Lululemon is up 56 cents out there. Everything else is down, is underneath $1 on the way up. That is on your IBD 50. So let's go back. Let's go take a look at DuPont and 3D Systems out here. DD is the ticker symbol for DuPont. Let's go see what DuPont is actually doing out here. DuPont, this is not a pretty picture out here. DuPont had a huge gap down. I'm just going to refresh my screen just to make sure that all is square here. So as we take a look at DuPont, it gaps up this morning. It's gapping up into the area that was a breakdown, a gap down, which is October 23rd. Right now, that supply line, it can't even handle the bottom, it looks like, of that supply line. That's using the low of that session. Again, the low of the session being October 23rd, and the low price point being $44.89. This morning, gaps up, gets up to a high of $44.89, and has been trading lower pretty much ever since. Not by any big shakes or anything, but $44.61. You can see the volume up there, 31 million shares. Yesterday's volume on this was 5.8 million shares. So far today, it's done 2.5 million shares. Not going to have the volume to bust that up. Looks like it's going to be rejecting that area. That was on DuPont. Let's go take a look at DDD. DDD out here, 3D Systems. When we come back, we'll take a look at 3D Systems for you. Maybe we'll go look at Stratasys as well. 3D Systems trying to test the swing point from November 29th. 877-927-6648. Dow's up 28. S&P's up 4. Composite's up 4 as well. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow up 19. Now, before we went to break, I said I would go take a look at 3D Systems for you. The ticker symbol there is DDD. Traded out at 47.38. Not really a bad-looking stock chart at all. We're going to take a look at the two 3D printer companies out there, Stratasys and 3D Systems out here. I think that's 3D Systems. Now, it is trading right now, trying to trade into and take on the most recent swing point high, which is November 29th out there. Trading inside it, it has 2.7 million shares. As it moved up into it yesterday, did it with 1 million shares. So it didn't have the energy. I got up in there today. It's done 376,000 shares in an hour's worth of trading, so about 1.8 if you did the straight line math. Not enough volume today, doesn't look like, to take on that swing point high. You see it's got a pretty nice support area here. Its most recent support area you can use as the swing point from December 4th, that low, $42.35. So it's going to be interesting to see whether or not this gets taken apart at all, just as Stratasys has, or is beginning to. Now, on the on the weekly chart, let's look at the weekly chart of this stock here. You can see it completed on a weekly chart a 1 to 1.272 A to B equals CD. That was in the 47.64 price projection. It's trading at 47.38 right now. Unlike, so this stock chart looks pretty good. Whereas if we go over to SSYS, Stratasys, we can take a look at this thing is now starting to show some signs of weakness. The first sign coming in on December 3rd when you had some volume off of the top there, 3.6 million shares to the downside. You had a similar session here. It wasn't volume off of the high necessarily, but it was volume to the downside on September 18th. That told you, okay, you need to kind of be careful on this equity here. So this could easily be setting up its first A to B equals, well, not its first, but it could be setting up an A to B equals CD down. Right now, this is going to trade down into the December 4th swing point where it gives you information. Now, that volume there is 2.5 million shares. So far today, only 81,000 shares. So it doesn't have the volume, doesn't have the energy yet to break this down. It is not traveling into it with volume yet, but this could be setting up an A to B equals CD down. There are some signs of institutional selling inside this equity. There's actually 3 signs, one on November 2nd, one on September the 18th, and another sign here on December 3rd. So that is not something that you want to see. This is an equity, folks, that let's put this on the longer-term chart as well. This completing also 1 to 1.272 A to B equals CD up. So very similar to 3D systems out there. And so that's why I say it'd be interesting to see if they decide to start taking apart 3D systems as they have here with Stratasys. Let's go take a look at, let's go into some of the Dow stocks here. Let's go into the Dow 9. How about that? They talk about, doesn't they call it the super panel of 8 or something like that? Well, you got the Dow 9 that represents 52% of the weighting structure inside the Dow. We know McDonald's here, they came out with their Happy Meal news a couple trading sessions ago when comp sales, same-store comp sales were up. I posed the question, is that a good thing or a bad thing? In this case here, McDonald's tried trading up into the gap down candle of October 19th with 19 million shares at the downside as it tried to get up there with 9 million shares. Couldn't do it even yesterday. You can see the bulls trying to push up here, but they just don't have the energy. So on McDonald's, the work to the upside looks like it is over. If we take a look at Chevron is up today just slightly, or was up. Maybe it's traded about even Steven here right now. It's a little bit up. Trade out at 108.09. It has completed a 1-to-1 A to B equals CD pattern out here. It could get up to the 109.12 so far right now, giving you a little bit of a reversal candle. But we've got a long way to go in today's trading session. I expect the market will be relatively flat here, coming into, I suppose, Uncle Ben's minutes being released. But, you know, I think he's pretty much told us everything that he's going to tell us out there. Let's take a look at IBM, see what IBM is doing. IBM coming into a downdraft, coming into a gap down, coming into an open window out there. Let's see what it did yesterday. Looks like we might have that. We can lift that resistance line, it looks like, to the lows of the window, which is November 6th. That gap down, the low is 194.68. Did it get up there yesterday? 194.80. It most certainly did. Gets up there, closes below it. Volume-wise, 4 million shares. We're going into 3.2 million shares, and also the gap down of 4.7 million. So really the 4.7 is kind of the benchmark here. So the work to the upside here in IBM may also be done as well, just simply closing the gap, or at least testing that gap and rejecting it out there. So there is a signal for you. You want to be paying attention to that, as well as Apple and other stocks. Let's go take a look at United Technologies. Let's go see what United Technologies is doing. That is trading still inside the September 14th swing point. That's got 7.4 million shares. It needs just a little bit more to try to get up and test the top. However, you get it closed below $80.68. That would be a reversal for sure, and especially if you do it on lighter volume. Yesterday's volume was 3.7 million shares. So you can see it's into a little bit of a resistance area. It gave us a couple of doji candles out here on the 7th and the 10th out there, suggested that it was getting tired from an energy level standpoint as it got up into an area that is going to be resistance for it. That was on United Technologies. As long as we're in here, let's go see what did we not look at here. That 3M. How about 3M? Let's go see what 3M is doing here. 3M also moving up into an area that is held as a resistance line. It is a huge downdraft area. You just simply can use the July 29th open if you want, 94.84. That is really what is held as resistance as this equity here moves up today. 7 million shares in a little over an hour. 7 million shares going into 20 million, but really going into 30 and 30 million shares. I don't think that this is going to have the energy to make it to the upside here. You would like to actually see it get back up and test that resistance level. So say right about the 94.84. It's at 92.96 right now. That is on 3M out there. Let's go take a look at just finishing this off here. Let's look at Travelers. See what Travelers is doing. Travelers trying to tag. It has not tagged yet. This high volume high from October 18th has 6.3 million shares. The price point is 74.70. Still traveling with inside that swing point. Doesn't seem to have the energy, and the candles over the course of the last few days here suggesting that it's a little bit tired. Now, quite frankly, if Travelers, so here would be a bullish sign. This would be something for you to look for. Would be if Travelers over the course of 1, 2, 4, 5 would be really today or tomorrow got above 74.36, and then it would really have to close above 74.70. You would have a continuation pattern here breaking out to the upside. But whether or not that pattern is going to fulfill itself, that's actually the pattern that is potentially set up here. To me, it doesn't look like it's going to do it. Looks to me more like it's going to reject that area, but it's got some pretty decent support in it. That was on Travelers. Let's go take a look at the currency market here. Let's go take a look at the Japanese yen, see what the yen is doing. The yen is getting weaker against the U.S. dollar, putting a little bit of strength in the U.S. dollar. However, the yen is up against a 0.786 Gartley sell pattern, with the exception of today's trading session. Just really been traveling sideways here. If the yen does close above this with conviction, and when I say this, we're talking about 82 would be the price point. Have to close with conviction. Let's see, it's then what this will do, this will set up a butterfly expansion. So if we take a look at what that expansion might look like, let's see if I can. I know I can. Let's do it for you. The expansion. This was a Gartley, a failed 0.786 Gartley. Not only does it do a 100% move of a move, folks, it will do a butterfly. It turns into a butterfly, just like a little caterpillar out there. The 1.272 butterfly expansion on the U.S. dollar Japanese yen currency pair is 85.64 out there. But this area here has to fail, and it has not yet. If we take a look at the daily chart of the euro, let's go see what the daily chart of the euro is doing out here. In the daily chart, having made a retracement, let me just go ahead and it's made a 0.618 retracement. Let's go take a look at that. That would be coming off of the high out here from a few trading sessions ago, December the 5th, all the way down to the low. We can see really trading out right now at that 0.618 level, 0.786, just a little bit above it at 137.18 out there. So the euro could be getting into a reversal area as well. That would put some strength in the U.S. dollar index. That's what's going on in the currencies. Let's go around over Europe and see what we have out there right now. The DAX is up 20 points. The DAX here, as I had pointed out at the 9 o'clock show, also completed a pattern, making a 1.272 expansion of swing points. We know that the DAX did break above an area of resistance. That area of resistance, really a triple top, a quadruple top out here, finally broke above it on the 6th. Then to gauge where the DAX was going to travel to, all you have to do is take a look at an expansion of swing points. That expansion being the high from September 21st down to the low of November 16th, 1.272. The exact number, 76.22.15. The DAX got up to 76.26.40. Trading out right now at 76.09.13. So the DAX may be setting up a reversal area as well. Let's go take a look at the FTSE, see what the FTSE is doing. The FTSE trying to break out above its highs. Yesterday, let's see if it closed. I don't think it closed above its highs yesterday. Let's just move the line up to the top here of the bar. That would be about right there. That is the, when I do that, the bar that I'm looking at, folks, is September 14th high, 59.32. It's trading at 59.39 right now. A rejection of that area would be today at close, coming in 45 minutes from now below 59.32. That might be one of the numbers that you want to write down on your chart as well. New York Stock Exchange, still the strength here in the marketplace, up about 0.2%, up 17 points. So I gave you the ultimate of reversals. I'll do that for you again. this would be a big failure. This would be a colossal failure, but this would be one that would say, okay, I would then start taking a look at long-term, short-term, and intermediate-term reversal signals out there. That would be today's closing with 1,783 net declining issues. Takes a lot of energy to do that, but if you were to see that, folks, that there would be giving you one telltale signal out there. That's on the New York Stock Exchange. 1,783 net declining issues. Let's go take a look at, let's see what stocks here we've got popping and dropping. Netflix. Let's go see what Netflix is doing out here. NFLX is the ticker symbol. That is actually, so here if you want to, Netflix is what's leading the market to the upside dollar-wise, folks. How do you like that as your leader in the clubhouse? O'Reilly Automotive right behind that. We'll go take a look at that stock chart. Those are two stock charts that you don't want being the leader in the clubhouse as the market tries to move higher. In fact, quite frankly, I gave you a bunch of reversal signals. Those two would be, I think, reversal signals as well. Netflix here moving into the downdraft from established on April 24th out there with 16 million shares. The high of that level is $90. Traded at $89.15 here this morning. Price-wise or volume-wise, 1.8 million shares. 1.8 going into 16.7 million shares. It doesn't have the volume today to break through that area. So you've got Netflix traveling into an area of resistance. Let's go take a look at O'Reilly Automotive, O-R-L-Y. I got to type right. O-R-L-Y out here. So O'Reilly Automotive moving into an area where it broke down. How about that? So let's go take a look at this. So I'm going to erase this stuff off of my screen here in a moment. O'Reilly Automotive, you can see the A to B equals CD down that it created, a 1.618. I'm going to go ahead and wipe that off of the screen here. Let's go take a look at, wipe this off of the screen here. We can see the consolidation range that O'Reilly Automotive is trading into. It's trading into today the resistance area. Now this thing has a gap down of gap downs. This thing here, folks, with volume, 12.8 million shares is what it gapped down with, and that was from the June 26th low, which was 94.55. When it fell out of bed, it got down to a low of 82.61 out there, but it's the volume. If we take a look at that window, that's this black horizontal line going across the screen. You can see the last time up there was with 1 million shares on December 3rd. Today, moving up there with 825,000 shares. It does not have the volume. The consolidation range on this is pretty nice because you're going from $94, down to about 80 bucks out there. So pretty nice move. O'Reilly Automotive being one of the leaders in the clubhouse. Let's go to Mark in Fort Collins, Colorado. Mark, thanks for calling. Thanks for holding. How are you doing this morning?
Great. How are you?
I'm doing great. Thanks for asking. You wanted to look at IWM?
Yeah, I'm looking for a short opportunity possibly buying the TZA, but what I'm seeing is it looks like it's on its way to 87.88 on an ABC up. What do you think about that?
Well, let's go see what it's doing out here. So you're taking a look at an A to B equals CD up. So you're using as your A point, using the November 16th low?
Yeah, B point is the December 3rd high at 24 million shares.
Yeah.
And then we broke that with 40 million yesterday.
Got it. Okay, we get back. We're going to go take a look and explore the IWM, possible A to B equals CD up with Mark and Fort Collins. The Dow's up 13, S&P's up 2. Russell 2000 and Composite basically flat right now. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I said, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. I'm your host, Steve Rhodes. Dow's up 9 points right now. S&P up 6. Russell 2000 up 40 cents. We're going back out to Fort Collins to Mark, and we're taking a look at the IWM. So we're going to bisect it and dissect it. How about that?
Good.
All right. So you were taking a look at a possible A to B equals CD pattern. Now, the first thing is, if I were to use your swing points that you identified, there's just not enough of a retracement there for me to use that as your B and C point out there. If I just simply come from the low of November 16th all the way up to the December 3rd, you got to get down to, about at least 24% or so. So not enough of a retracement there. It's almost more of a straight line move. If I were going to use anything as an A to B equals CD, and I don't like to do this too often, what I would do is I would really be using I would be using the November 28th candle as both my B and C swing point if I were going to draw an A to B equals CD out there. I'm not at this stage, but, it would look really like this, if you will. Now, and if I take a look at that retracement, it probably gets me down into, doesn't get me down to the 0.382, but it gets me at least a little bit closer. 79.33 would have been the exact 382. It gets down to 79.63 out there. So that's a little bit of a, of a delineation. Having tracked enough of these AB equals CD patterns, that's what I would be looking at. That would get you to 84.82, and that certainly would be a possibility if it could reject this area and get through the volume that it's got, which is a supply line that is really rejecting it, Mark, which is September 25th out there. 74 million shares, coming into that area yesterday with 40 million shares. Today it's done, 12 million, maybe it could do 50 million. It doesn't have the energy to bust through that level. So that's a possible pattern that, that certainly is that A to B equals CD, but it is really giving you a signal here that it can't handle it up in this area. Now we're going to go, from there we're going to go over to the index. I'm kind of doing this in reverse order. Normally I would do it just the opposite. Because, the IWM in essence is traded off of the Russell 2000 index. The Russell 2000 index, what it is doing, and you might find different candle patterns that are out there, and so you want to be paying attention to, the underlying instruments out here. So on the Russell 2000, what the Russell 2000 is doing today, it's testing the October 18th level, and it's rejecting that. So it went up, it tested that little gap down window. That's still an area of resistance. In order for your pattern to possibly complete, this has to close above 837.12. It's at 835.28. Doesn't mean it can't do it today, but in order for that to happen, it's at least got to first repair this resistance window out here. That is on the daily area. Maybe it gets up to 846 would be the 0.786 level if it closes inside 837.12. So that's what I would be looking for there to give you a signal from a short. Now I'm going to go over into the daily futures contract for the Russell 2000 and pay attention to this one, because right now I'm going to go ahead and erase the line here. It'll be easier for us to see. What we can see here today, it's got a little doji candle as we speak right now. Well, it's flat. Makes sense. That tells you that it's getting tired as it comes up into this area. And this area here being either the October 18th or the October 17th level. So it's in an area where it's got some pretty decent resistance. It broke out yesterday. No doubt it did that. And so, but look for this to look, I would be paying attention to the Russell 2000. Now, what I'm going to do here real quickly for you, going down and digging down into the intraday chart, and what does that tell me? The 30-minute chart here was making higher highs from the time frame of yesterday at about 5:30 in the morning all the way into the high that was put in at 8 o'clock this morning. You see that line out there making higher highs? Yeah. Relative strength was weakening. That is not natural. That is not natural price out there. So going to have to watch how the next real retracement on the 30-minute chart on the Russell 2000. I hope that helps you.
Yeah, I'm looking to get into that TZA when it kind of runs out of steam.
Okay, you got it. Hey, thanks for calling. Folks, stay tuned. Basil Chapman will be up next. Have a great Wednesday. Look forward to seeing you tomorrow morning. Take care, folks.